We record this new video, the votes are still being counted, but Mike Zuzolo, president of Global Commodities Analytics, will speak about the rising soybean prices that are occurring this week, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, soybean prices are rising. There is a detach from the Brazilian soybean prices from the US soybean prices and Argentine soybean prices. Did you expect that prior to the election? Is that related to the election? What do you think?
I think there's a couple of factors. There is partially, I think, the election that is being priced in here, or the lack of a conclusion on the election, Luis. One of the things that you and I have talked about a lot, and I've really tried to stress to clients and subscribers heading into the election, as the COVID spikes and as we have not had any new fiscal stimulus here in the United States, is the idea of whether the dollar continues to go higher as a safe haven bid as it started out this week before the election, or whether it's continued its recent trend over the last month or so of going lower and signaling to me that the commodity markets are still trying to create a reflation or inflationary bias. And it's been very interesting this week in the currency markets. I will say right now, based upon what your question about the soybeans rallying in the futures market, I don't think it's all weather. I don't think you could have had this big of a rally in the soy complex post-election had it not been for the technicals in the currencies. The dollar tested a major moving average. It failed to go above that. We have not been above that moving average since May of this year. Maybe even more importantly is the Chinese currency. It made a fresh 5-week low early in the week. Now, as we close out the week, it is making its highest move since mid 2018. So the buying power in China for them to be able to buy US product has literally shifted in a substantial way in just the matter of 4 days. And so this is the kind of volatility you and I were talking about before the election, and especially if it's a contested election. So don't think you're out of the woods. Don't think this volatility is going to go away anytime soon. It's only going to get worse as we go through this process, especially if the votes stop getting counted and we see a lot of these states and the decisions on the ballots turn out to be more like 2000 between Bush and Gore, and it heads to the Supreme Court. Expect even more volatility in that scenario.
And how much of a factor will be the US dollar for the corn, soybean prices, and wheat prices?
Well, the wheat continues to trade similar to the copper market. And so there you see that connection with China and the overall global economy and the currencies. The hogs and the soybeans have been trading very closely with one another, so that pork and bean trade is still very much alive. That goes back to the demand side in China specifically. And today's reports for weekly export sales by USDA showed another very strong weekly export sales at the top end of the range of estimates for soybeans, but it was about 30% below the 4-week average. Hogs, however, came in over 42,000 metric tons. China was the number 2 buyer and number 1 shipper as far as destination. And those numbers were very strong in terms of the pork. So I guess what I'm seeing right now, Luis, is we are probably rationing some demand in the soybeans, especially since the Paranagua export price has literally fallen $50 a ton here this week. We have gone from well over $525, $530 a ton back down to about $480 a ton in Paranagua. That compares to our U.S. Gulf and Pacific Northwest price about $20 less than that. So we've really cut the discount in the U.S. prices versus Brazil. That's an early indication that we're starting to ration demand, and that the Brazilian prices and the Brazilian demand could start to be a player again, and the funds may be getting a little bit too long. A lot depends on the weather, but that's some of the early indications.
I see great potential for that to escalate as the Brazilian weather worsens. That could uh, be a huge booster for the soybean prices.
My latest weather models, and I use 3 or 4 different sources, but pretty much all of them are coming in fairly strongly that northern Brazil, center west Brazil looks like it's going to shape up and probably still have the potential for a decent crop. It's still the southern Brazilian areas and the Pampas regions of Argentina that are in very, very tough shape. Is that what you're hearing as well?
Yes, all the same. Below the south to the state of Paraná, it's all dry.
And that goes all the way down to Entre Rios and in Argentina, and even into some parts of Cordoba, as I understand it. And I
Yes,
think we
very
were at go
very
ahead.
significant parts of Argentina.
And so if I look at that and I think they came out today as we go on the air that Argentina by BAGE, the Buenos Aires Grains Exchange, came in with 4% planted on soybeans in Argentina, about half of where they were last year at this time. It seems to me that we're getting to the point now where it's getting too late for the corn planting in Argentina, and they're going ahead and planting beans, essentially just to get them in the ground and hope that the rains come. Is that what you're sensing as well?
Yes, there will be a huge delay for planting of corn, and we have no idea how big will be the next surface.
Yeah, and I think Refinitiv or someone like that, a Landworth type modeling agency, came out with, I think, a 44 million metric ton Argentine corn crop. I'm around 45, but I'm willing to go lower if we don't see anything as in terms of improvements by the time we get to the end of this month, because based upon the charts that I use and the planting calendars, is by the time you get to Thanksgiving, it's just not going to pay to plant any corn.
And getting back from what you were saying in the last few episodes, do you think wheat is still the lead here?
I do. I think it's very much the leader because we still have issues in Russia and Ukraine and the United States. And we're starting to get up there in cash corn prices and cash milo prices to where the wheat's actually getting a little bit more competitive again in feed rations. And I think this is where, if I looked at all of the commodities in terms of the futures market, while wheat led us higher, it's really been the soybeans here recently that have taken off sharply. Wheat and corn have kind of stabilized, and they almost look like a consolidation and potentially to go another leg higher. With the drought monitor coming out this week and showing while the overall drought in Kansas went down, the more severe drought levels like the D0 through D4 drought levels actually increased, and they're still disproportionately above last year at this time. I've talked to a couple clients in the wheat country of Kansas, some of the top 10 counties of the state of Kansas for the hard red wheat. And they're talking about this being a multi-generational low acreage base and a multi-generational low yield issue, and one of the worst crops they have ever seen as far as we enter dormancy. So I think hard red wheat is poised to take soft red wheat up another leg. If the dollar remains contained, that benefits the corn a lot. Beans, maybe we've already put quite a bit of premium in them. Maybe the beans try and go up a little bit more. But I think, again, the beans are more tied to the South American weather. And once we know the election results and the fact that China still has African swine fever, we really do have to think about the possibility of China canceling some soybean purchases if Brazil's weather straightens out.
Yes, and that seems to have a change for the economic scenario for livestock producers, don't you
I
think?
do. I'm really concerned with these hospitalization rates. We've eclipsed 50,000 hospitalization in people coming in on the hospital because of COVID. We're getting up to 3, 4, 5 month highs at this point. And I think the other thing we have to, excuse me, the other thing we have to think about, Luis, is, while the grains and the oil seeds have weather to support them, the livestock sector does not. So you have a COVID issue. If you don't get a fiscal stimulus bill because you don't have a new president, and then you don't have the support of the weather underneath you, then all of a sudden you don't have a lot of reasons for the livestock to continue to gain a premium. And this is the key, I think, right now when it comes to ag commodities. The end user is on the defense. It's a seller's market because of the weather and because of this Chinese demand, which are all wrapped up into one bow, one circle, that positive feedback loop that you and I've talked about. Livestock, it may not be that easy because the end users may feel like, well, if the consumption's going down because of COVID, and we've got these massive supply, these production numbers coming in the first quarter of 2021, which the Hogs and Pigs report and the cattle and feed reports suggest we do, the packers won't feel like it's a seller's market, that it's more of a buyer's market and more favorable to them. I think this next week is a very crucial week for the cattle and hogs to rally, for the cash markets to follow, and if we can go up a little bit more to get some hedges in place for the cattle and the hogs.
Yes, we are not sure yet who is going to be the next president, but we are pretty sure that we are going to have a divided government in the United States. Do you think that will be positive for the farm production?
To a degree, but I think that if Vice President Biden ends up winning and this does not go to a Supreme Court like 2000, and we continue on this path of COVID hospitalizations, I believe his administration and his people and the Dr. Fauci's and the Dr. Birx's and the medical people in the United States will have more of a role to play in terms of what we do here. And so I would be expecting, from a risk management standpoint, of a European style lockdown again if we see a Vice President Biden win here. So that's really what I'm trying to game out, if you will, for clients and farmers and rancher clients, so that we aren't caught by surprise if we go into another tough lockdown like we had last spring. And again, that would probably hit the meats, the energies, and the cotton the first and foremost.
Yes, and one thing you asked me a few times was about the Brazilian Amazon and the possible European retaliation.
Right.
One thing I think it's going to happen is that if Biden gets finally elected, he would propose those sort of sanctions, and then Europe will join him because that is the sort of thing that Europe wouldn't go alone.
Yes, I think you're absolutely right, because the vice president has already said that he is coming back into the Paris Climate Accords and the Paris Climate Agreements. And so if he does that, then the Europeans and the United States have essentially one voice in what's going to happen going forward. And I do think that's a very strong plank of his platform and what he ran on. I mean, it was a pretty stark choice and a very open choice. You knew which candidate stood for what. And that's one of the beautiful things about the democracy and about how our media is, and how wide open we are here in the United States, is we just put it all out there before the election, and you had a significant choice to make depending on what your beliefs were. And so I think that's where using his website, using the people, I was just looking at an Economist article this afternoon about his possible pick for U.S. Treasury Secretary. That's going to be a big deal, and that's going to be a big deal from a monetary policy standpoint too if he wins.
Yes, and one of the things that could also happen is that he would be a lot more multilateral, and that could mean more trade.
Yeah, I think that's right. And that's where the currency markets would probably have to unwind a lot of what they have done over the last 4 years. And this is where it goes back to, if you don't have a strong fiscal stimulus bill in the middle of COVID, and you shift in terms of your energy policy and your greenhouse gas policy and your multilateral trade comes back, does that mean the dollar comes back as the safe haven and the main global reserve currency? This is why the Chinese currency in part is its strongest since the middle of 2018, and that's pure buying power right there when it comes to China. They want a stronger currency because they want to import more, but they also want to become more of a global reserve currency like the United States dollar. Does this all get changed then if the multilateral trade platform comes back with the Biden victory? So this is where this volatility, this strength in the commodity markets, it may not last. I think that's what, between COVID and the fiscal stimulus and the eventual outcome of the election, I'm still a sell and defend guy at this point as far as a risk manager.
And we have some recent talk about China purchasing U.S. ethanol. Do you think these sort of moves can continue?
I do. I think that they are really needing to cool their prices down because that's the one thing about a higher currency. It's kind of what Brazil's facing, the same thing, except Brazil's a producer of ethanol, a producer of corn, a producer of soybeans. But even being a producer of all these, Brazil's still fighting a pretty stiff inflationary policy because of their currency. And so I think this is where the Chinese want a stronger domestic currency, but they better keep their supplies high or they're going to have a lot of inflation. So they're not an ethanol producer yet to the magnitude they need to be. And I think this is why the ethanol markets were very surprised by the weekly data, where our production number was the highest in several weeks, and our supply numbers are still sitting at 3-year lows. I noticed that the ethanol on Thursday's trade at times was 3 to 4% higher in the day trade. So I think this is a big deal because you have the feeder, the corn feeder from the livestock perspective, the energy feeder from the ethanol perspective, and then the export guy that's needing to import more corn. You've got all three segments for the corn demand running very strongly. And that's why I still think corn ultimately is your best commodity to hold in a cash or in the bin format.
Yeah, the Ag Barometer poll has shown record optimism for farmers in the U.S. But Mike Zuzolo, are you bearish on something other than?
I'm bullish on corn. I think it's the best commodity to hold, and it's the best one in terms of being able to go higher. I am still nervous about the oil seeds and the soybeans, and I talked to a client today about this, and I said, think back the last 5 years of where we have been, and let's not be put back into that position where we have low prices and we have, we probably can't expect too much in terms of government assistance at this point from here on out. Really use these profitable levels to get floors underneath you, because if the market keeps going higher with known cost hedges, you're going to be sitting very good in the northern hemisphere as you get ready to plant. So I try to stay away from the bullish bearish mindset, Luis. I get bullish and bearish based upon the dollar more than anything else. And so the commodity reflation trade is still alive and kicking, and we saw that this week. But if the dollar technicals turn on me, knowing that special algorithmic traders trade about 20% of the daily volume in the dollar every single day, those algorithmic traders could be your friend one day and be your enemy the next. And keep in mind, 10 to 20% of these special algorithmic traders ends up being about $400 billion a day that they trade. So they can make your life pretty hard if they're taking the dollar up sharply. So that's kind of where I sit with the bullish bearish mindset on commodities.
Yeah, so I will use now the word optimist. Are you optimist about sorghum right now?
Yeah, I am. I think that until we get the acreage base planted in the northern hemisphere next spring, the end users, it's still going to be a seller's market, and the end users are going to be playing the defensive game in the grains.
So that is good news for one Oklahoma farmer that is watching us right now.
Fantastic.
So anything else to add, Mike?
I think that'll do it. Thanks for having me as always, Luis.